Good evening and welcome back. I'm ARIF ISYRAF ZAMRI, bringing you to the latest developments from the global energy and financial markets. Today, global energy markets sent a strong signal and the Gulf region felt the impact almost immediately. On December 16, 2025, oil prices slipped below $60 per barrel, marking their lowest level since May. This decline triggered a ripple effect across Gulf stock markets, with Saudi Arabia's index among the hardest hit. For oil-dependent economies, this is not just a price movement, it is an economic warning. Across the Gulf, stock markets dipped in Tuesday session, with most exchanges feeling the wave of global equity retreats and slip in crude prices that reverberated through investor sentiment. Oil, the lifeblood of this region's financial past, slid more than $1 and dipped back under $60 per barrel, touching its lowest level since May. That shift didn't go unnoticed in trading halls. In Saudi Arabia, the benchmark index, Tadawul, closed down about 1.3%, settling near 10,453, its softest standing in 3 months, with broad-based losses across sectors. Even giants weren't immune. Al Rajh Bank recorded a nearly 2.1% dip, and oil titan Saudi Aramco edged down around 1%. It's a story that feels like ABB and flow, where ebbing oil prices can quickly become the tide that redraws the shoreline of market confidence. Looking over to Qatar, the benchmark index felt its third straight session of decline, fading about 0.3%, with Qatar Gas Transport and Duhan Bank among those slipping into the red. Abu Dhabi's market mirrored this cautious tone, sliding slightly around 0.1% as heavyweights in consumer staples and energy faced downward pressure. Yet, even here we saw narrative complexity. ADNOC, AD and OC announced a major strategic move, securing roughly 95% control of German chemical firm Covestro in a 14.7 billion deal. A bold accusation, that's rewriting headlines amid market softness. Now, hear the twist. Dubai Index didn't follow the regional slump. Instead, it managed a modest bounce, up around 0.3%, inspired by gains in MR Properties and Salik Company. That divergence tells a story of pockets of optimism even when broader tides pull back. Slide over to Egypt, and EGX 30 also lost ground, about 0.7%, flipping gains from prior session into losses as sentiment cooled. As we can see from the chart besides, what's sparking this mood shift? First, oil. The returns of sub-$60 price territory resonate deep in Gulf economies, where crude isn't just an commodity, it's a financial heartbeat. When oil slips, so does confidence, even for markets that are trying to diversify. Second, global data vibes. Investors are locked onto upcoming US employment and inflation releases, which could shape the Federal Reserve's policy trajectory. Because Gulf currencies are generally pegged to the US dollar, any hint of rate shifts in Washington can send ripple all the way to Riyadh and Abu Dhabi. In markets driven as much by expectation as by earnings, these macro signals become the beat producers, looping, remixing, influencing every buy-sell tempo. And here's a subtle twist. In times like this, accusation and strategies deals like economic European play become anchors of long-term vision. Even amidst short-term flux, it feels like a reminder that markets are just not charts and numbers. They are narrative of race, resilience and reinventions. So, as we close tonight's broadcast, the Gulf stock story is one of softened sentiment and strategic turns, echoing the global dance between energy prices, investor confidence and microeconomics anticipations. Markets are breathing, pulsing, alive with data and direction. Stay tuned, stay curious, and keep riding the waves of financial cosmos with us. Until next time, this is your Market Beat, signing off.